Hi everyone, this is Mary with Reassist. I want to do a quick video tonight just about some things that came up today. You gotta excuse the makeup, lack of. Got home, cooked dinner, kind of got outside of my work clothes, and I thought, I need to address this because I think that this is not understood by agents nor the buyers and sellers. So the question is, can you terminate a contract if it is in a flood zone? Let's say that an offer was written and there was a property condition disclosure exemption, and so it wasn't asked if the home was in a flood zone or not, and it was not verified prior to writing the offer if it was in a flood zone. So if we look at the RF 401, which is the resale, purchase, and sell that's available from the Tennessee Association of Realtors, on line 327, excuse me because I've got my phone here looking at it. What it says on line 327 is, I just moved it, buyer's additional due diligence options. If any of the matters below are of concern to buyers should address the concerns by specific contingencies in the special stipulations section of this agreement. A, survey and flood certification. Survey work and flood certification are the best means of identifying boundary lines and encroachments and easements or flood zone classification. Buyer may obtain a mortgage inspection or boundary line survey and flood zone certification. The second one is insurability, water supply, water disposal, and title exceptions. So these are 5 separate items that, as it states in line 327, if these are concerns to the buyer, they need to be addressed in the special stipulation section of the contract. If they're not addressed in the special stipulation section of the contract, they're not a contingency in the contract. So if an offer is written and it is not disclosed, and it doesn't have to be disclosed. The seller does not have to disclose it if it's a PCD exemption, property condition disclosure exemption. So then the buyer finds out, oh, it's in a flood zone, and usually the lender's the one that finds this out. The buyers can't terminate the contract. It's not a contingency in the contract. Now, there is a little loophole to this. If by getting the flood insurance, it then takes the buyer's mortgage payment up above what they are actually qualified for, then they would no longer qualify for the loan, which means that then they can then exercise the financial contingency in the contract, if there is one, and then terminate the contract based upon the financial contingency. But they can't just terminate it because of the fact that it's in a flood zone or that they have to have flood insurance, unless it is written in the special stipulation section of the purchase and sell. It says this, line 327 goes all the way down to line 347. It addresses the survey, the flood certification, again, the insurability. And it says, under insurability, many different issues can affect the insurability and rates of insurance of the property. These include factors such as changes in the flood zone certification, changes to the earthquake zone maps, the insurability of buyers and previous claims made on the property. It is the right and responsibility of the buyer to determine the insurability, coverage, and cost of insuring the property. It is also the responsibility of the buyer to determine whether any exclusions will apply to the insurability of said property. But again, these are things that, if these are of concern to the buyer, they need to be written in the special stips. They're not part of the contract. But again, with the flood insurance, if it does take the buyer's payment over what they would qualify for, then they could get out of the contract on the financial contingency if that is in the contract. So, the best bet as an agent is, before you write an offer, go to the FEMA flood maps, put the address in, look it up, see if it's in the flood zone. I will post that website below this video so that you can save that. But you should look up all the properties in there, because it's protecting you, it's protecting your buyer. And I would still, if it is in the flood zone, I would definitely still write that in the contract that, about the insurance, that the buyer, put a contingency in the contract that the buyer has to be able to afford the insurance, the flood insurance, and the payment, because even if the flood insurance still keeps his payment below what he's qualified for on a monthly amount, he may not want a property that is in a flood zone. It's very possible. Tennessee is a buyer beware state, and so it's buyer's responsibility to do due diligence on the property. But you have to make sure that these are written into the contract so that the buyer is protected and can terminate the contract if they later find out that, hey, it's in a flood zone. Or maybe, let's talk about survey. We all assume that a property line is somewhere, and maybe it's not. And if they get a survey done and the property is not as big as what they thought, or maybe it's in a different place, then they would still have that right to cancel the contract. So, just my opinion. Just wanted to share it with you guys. Read your contract, put it in special steps if it's a concern for your buyer. And I will again put the link to the FEMA maps below. And if you have any questions, give me a call. Again, I'm Mary Reed with Reassist. You can visit our website at reassisttm.com for more information, or you can give us a call at our office at 931-553-1816. Thank you.